Welcome to my daily report market analysis videos on Wednesday the 27th of November with me, Richard Perry, market analyst at Hantec. There's a relatively dollar positive look to markets today, nothing too decisive, a little bit of edging of dollar positive across the Forex majors. You've seen risk appetite that has been continued to be generally positive surrounding this US-China trade dispute, but it's interesting that we've not really seen Forex majors taking too much direction off that, and it's interesting that Treasury yields, for example, have started to stabilise, and that has come as these Forex markets have just sort of edged a little bit dollar positive, interestingly enough. Now, it only really seems as though the equity markets are taking the positives out of this trade dispute at the moment, because broadly speaking, I think markets are becoming a little bit fatigued by the constant toing and froing of the news flow surrounding this trade dispute. I mean, considering that it seems as though that there is an edge towards resolution of phase one, we're not really seeing a great sort of explosion of risk appetite. Interesting that we're still seeing dollar CNY above 7, which is still considered to be a bit of a line in the sand there, and below 7 we'd be expecting to see the Chinese yuan strengthening in the event of phase one, but not really seen it. Also, as I said, Treasury yields starting to stabilise and lose a bit of direction. Forex majors edging a bit of dollar strength, but at key levels. You've got euro dollar edging back towards 109.90. That's a crucial level. Dollar yen between 109 109.50, again crucial level. And my chart of the day, Aussie dollar 67.65 is a crucial level of support there. So some key levels being tested, but not quite yet seen the decisive direction off the back of them. What we've got today is again another clutch of US data to look out for. We've got the first up, the second reading of GDP at 1:30, expected to be unrevised at 1.9%. We've also got the durable goods ex-transport at growth of 0.1% after a 0.4% decline last month. Moving on to weekly jobless claims 221. Now this is interesting because we saw a spike to 227 last week. 221 is still above that 218 3-month average, so that will be an interesting data point today that possibly could see the dollar a little bit pressured if it remains above 220,000. The pending home sales for US at 3 o'clock expected to see 0.8% growth, and then weekly crude inventories. Now, a 0.4% decline in inventories would be a drawdown, and the first drawdown, after 9 of the last 10 weeks have all been in inventory build, a drawdown would be oil supportive. So that's worth watching out at 3:30 this afternoon UK time. Now, my chart today, Aussie dollar, interesting chart because, as I said, the risk appetite has been improving, but you're not seeing that through the Aussie dollar, and you're seeing a downtrend formation that's built over the past 3 weeks. You've seen a decline below the 68, I mean we could call it 68 big figure, but 68.05 I've got here. A decline below that in the last few days, about a week or so, and consistently now trading underneath that as a basis of resistance in the last few days. As this downtrend drags lower, you've got the momentum indicators, MACD lines falling below neutral, stochastics bearishly configured. I think RSI under 40 would be a signal for a breakdown below 68.65, which is, as I said, the level that's been tested in the last 2 weeks but held so far. But as I said, a closing breach of that, and you really are going to the bottom of this, what I suppose is a sort of a medium-term range, and then you're looking at 66.70 area. The next real support doesn't come in until 67.20. So there is capacity, I think, for downside potential if you do see a closing breach at that 67.50 mark. You see here on the hourly chart, lower highs, lower lows, consistently failing around 60 on the hourly RSI. Consistently now sort of moving sell signal under around that neutral point again as the rallies have fallen over. As I said, 68 figure area resistance. and you wouldn't really see the bulls in control until a move above 68.35 really, which would constitute a little bit of a near-term base pattern. But to be honest, I think you're still looking at selling into strength on the Aussie dollar. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.